In this video, I will show you all the mistakes I made during 2024. There are many, and if I didn't make these mistakes, I would have had a stellar performance, plus 50%, plus 60%. But like everyone, I make a lot of mistakes, and this is also the goal of this YouTube channel, to show you everything in my life of managing money. And full transparency mode here. My portfolio is public, my performance is public, and now my mistakes will be public. My name is Christophe Nour. I've been investing in the stock market for almost a decade with a performance of 25% per year, and I wish I did more, but here are the mistakes. The first one is Stellantis. I made a video about Stellantis a few days ago. Long story short, I invested in Stellantis at the price of $17 last year, and I held, and I had a nice gain until March 2024, and since March 2024, the stock crashed 50%. The auto industry is very cyclical. You have big ups, big downs. You have to buy low and sell with max optimism. I saw here the opportunity, and I hesitated to sell out of my investment here. Let's say here, when it started to drop, I said, okay, Chris, can you lock your gains? You know this is a cyclical company. You know it will maybe crash. It's ups and downs. Now you have a strong momentum. Things are looking nicely. Do you lock your position right now? But I didn't see much opportunities in the market, so I just waited. And you know what? I just waited, and the company keeps struggling and struggling. They, instead of generating cash flow for 2024, they changed their guidance, and now they will burn cash flow for 2024. Management left, CFO left, CEO left. All the industry is struggling. All the car makers in the world, automakers in the world are struggling. We are in a bad position, and I recently sold it. So it's not a real cost, because it's okay. I was not vanished minus 90%. It was a loss, but okay. It was a huge opportunity cost, because I could have sold here and I would have locked a 60% gain. And you will see that I often do this mistake of just buying at a good price and holding. Maybe holding for too long. I have another mistake for you. It's Williams-Sonoma. Williams-Sonoma is a different story, but the exit point is similar. I bought the stock when nobody wanted to buy the stock, at around 50 to 60. Okay, $60. I waited. It went nowhere. I bought here in 2022. It went nowhere. And 1 year after I made the investment, the stock picked up nicely. And we went from a PE ratio of 7 to a PE ratio of around 15, improved profitability. That's nice. If you don't know Williams-Sonoma, they do furniture in the US. Tables, doors, beds, bedrooms, and they don't grow a lot their revenue, but they focus on margins and efficiency and buybacks. And I love it. With a PE ratio of 7. It was here, standing alone. You don't need to invest in a SaaS tech business at an expensive valuation. Sometimes you have businesses, strong businesses with strong management, and efficiency is here, and it will generate large returns. They increased buybacks when the stock crashed, and now we are here, and the stock was, when I bought it, was almost a triple when I bought. So here is the performance, and to be honest, it was one of my biggest position allocation in my portfolio, because it grew at a point that was very, very large. It was like 20-25% of my portfolio. So when I tell you when it increases, it boosts my performance, I mean it. Like, I outperformed the S&P by far. And here, in March 2024, they delivered stellar earnings, wonderful earnings. And you don't see it. I want to see the candles on this one, because in March it was a special day. Chart here. You will see something that is not often talked about on YouTube, by the way. Hop. Do this. Let me close this. Let me close this. Okay. So many ads. We are now in March. Big earnings, big profitability. Everybody expected the margins to go down. They say, no, we will keep our 15% EBIT margins. That's fine. And then in May, you have another earnings. And something changed radically here. Because you see this big red candle here? Let me zoom in. Maybe you didn't see very well. You see this big candle? They reported earnings. The reports were okay. A lot of margins, efficiency, and the stock opened plus 8%. And at this point, you remember it was my largest position. It's up 8%. So right now, at this point, I'm plus 20% year to date, compared to an S&P 500. Let me compare. It was May 22nd, compared to the S&P 500 at a lower performance year to date. May 22nd, compared to performance of the S&P 500 of 12%. So 8% alpha. My question for you is, do you lock your gains and you sell your 25% position, 25% of your portfolio, and you lock the 8% alpha? Or do you greed a little bit because you still believe in the company, you still believe in the management? Laura Albert, one of the best CEO retailing business, and the stock has been a triple, and every time they delivered earnings, look at this, the stock continued to go up and go up and go up, some correction and go up. So now you are here. Let's say markets open. What do you do? You have a few minutes to decide. Why? Because the stock is crashing like a rock. Let me put 1 hour. What is that? Where am I? I'm in December, November. October. And at the moment the stock opens, it starts to go down. I'm in July. I'm in June. Look at this. It opens 8% higher. You have a few minutes to decide. What do? Do you lock your 8% alpha? It continues to go down. Hesitating. What do I do? So I review the earnings report. I read it twice, 3 times. I said, okay, what should I do? Do I lock? And now it's 8%. Now it's only 6%, 5%, 4%. What do I do? Okay. Do I have other opportunities to put the cash in the meantime? And since you are thinking out loud, the stock is crashing and not waiting for you. And in 1 hour and a half, boom, all your gains evaporated. You are no longer plus 20%. You are only outperforming by a few percentages. And you know what? It doesn't care. The stock doesn't care. It continues to drop and drop and drop. You have to make a decision. This day, you have to make a decision. Do you hold or do you sell? The stock continues to crash. What do? You see all your alpha evaporating. What do? You are at the end of the day. It's only 2 hours of market opening. So what do? We are already down. It's now from plus 8% to minus 4%. What do? Maybe it can crash more. Maybe in the past it went up like 20% in one day, some days when good earnings. So it can go down minus 20%. But earnings were good. So you compare the different competition, restoration, hardware. What do they do but competition? The moat, you are waiting for the earnings call because it's the later in the same day. And since you are here, what do? The stock continues to go down and all your outperformance vanishes. And during the moment when you end thinking and you have a conclusion, the stock was down minus 8%. From plus 8 to minus 8. Remember guys, it was 25% of my portfolio. 25% of my portfolio. So it had a huge impact. And let's round things up for our calculation. Let's say it was 25% of my portfolio. Let's say it was going from plus 10% gain to minus 10% gain. So you are talking about plus 2.5% outperformance, minus 2% out of my performance. So let's say I was at plus 17% here, year to date. I went up to 20% year to date, went back to 14, 15% year to date. You have a 5% change in performance year to date just in one day because you didn't make a change in your position. And actually, I regret this position. I regret holding, but this is my style of operations. What I preach on this YouTube channel, to buy and sit tight and hold, works for great companies on average for the long term. Sometimes you will have stressful days like this. You will have special situations. I mean, this was special. This was the first time it happened. If I zoom out a little bit, you see that every time it went up, look at this. Look at this chart here. Okay, come on, let me zoom in. Oh. Last time it reported earnings was here, went up and up and up and up, consolidated and went up again nicely. So most of the time when they report earnings, it was a great day to be adding more, but not this day. And this day was the beginning of hell for my portfolio with a very dry summer. So okay, what do I do now? The stock is still here, the company has not changed, the CEO has not changed, the management is still here. Do you hold, do you sell? And now during all this summer the stock went nowhere. We didn't reach a high valuation. It was a PE ratio around 15. Okay, so let me continue. This valuation, okay, they do a split, a 3-for-1 split, and in the meantime all the stocks were going up. The S&P 500 is going up, the Dow Jones is going up, the Nasdaq is going up, and I'm here standing with my bag and the stock does nothing. No rebound this year. So no rebound this time. And all summer long you have a drag with a huge opportunity cost. It's a mistake. All the market is going up, and my 8% alpha outperformance decreased and decreased and decreased, and now I'm no longer outperforming. Okay, so you are faced with a difficult situation, whether you sell out of your share directly and you buy something else that is working. That's, by the way, that's the job of the portfolio managers. At the middle of the year, you assess your portfolio. You see whether you like the portfolio or not, because the goal is to outperform for a lot of managers. So you don't want to be holding the bag. And for Williams-Sonoma, seems like momentum has stopped. So what do I do? Okay, let me wait. You see some cyclicality here, up and down. Let me say to sell the position when it's up a little bit. This is exactly what I did. And over here, I sold over here, I think. Just after I sold, it dropped like a rock. Wow, it dropped meaningfully. Okay, and now it rebounds a little bit. And it runs a little bit. Okay, so I was pretty happy with my position. The few weeks after I sold it to buy something else, it didn't rebound, so that's good. And you know what? In December, they reported some good earnings. End of November, and the stock went up and up and up. So if I didn't touch my position at all, I would have had an additional 20% gain. So if it was 25% of my portfolio, that would mean like 2% outperformance. I think it's still worth it to have sold the position. If I held the stock, I would have underperformed by way more the S&P 500. So good market timing, say whatever you want, huge opportunity cost. Just this day was maybe the most intense day of my whole 2024. What do you do when the stock is up like 8%, but nothing has changed, but you have the momentum? This is a tricky, and nobody knows. So you just pray, you wait and pray, and you sell here. And it was a 2-for-1 split, and that's it. And let me show you another mistake I did. Very similar to this situation of waiting and doing nothing with Alpha Metallurgical Coal. Another mistake for 2024. I bought Alpha Metallurgical Coal in 2023. It's a met coal company, and I stole this investment idea from Monish Pabrai. Great investor. And they sell met coal in the US and also abroad. And look at the stock chart. It's a mess. I learned that Monish Pabrai bought the position around here during spring or summer 2023. I liked the story a lot. I spent days and days and days analyzing AMR, this business, and I thought this is a good opportunity. Let me put up 3% of my portfolio, just to. I'm not an expert, so I won't put 10%, but 3 or 4% of the portfolio. That's fine. I have Monish Pebrine with me. I have David Einhorn with Greenlight Capital buying another met coal company, Consol Energy. So you have some momentum, and at the moment, AI names, tech names were quite expensive. So yeah, why not in 2023? Let's buy this. I bought the stock over here, and it went up and up and up. And we started 2024 here and went up and up, and now we are at peak, and it's a double. Congrats, Christophe, you reached a double on a stock that you recently purchased. A double within 1 year is extremely good. Congrats, plus 100% gains, even more, 110% gains. Same situation, guys. Good earnings. What do you do? I mean, every time they reported earnings, the stock went up, the valuation is still cheap, the market is still cheap, the management is still confident, and the stock went up a lot. We reached from $200, now the stock price is $400. What do? Do you greed a little bit more because Monish Pabrai is buying more? Monish Pabrai is buying more stocks, so you can build a lot of conviction. You know the story, you know the business, you believe in the long-term thesis. They do a lot of buybacks, so time is their friend. What do? Do you sell? Do you lock your 100% gain? Or do you wait because you want to triple or quadruple? You know me now. I did the exact same mistake. I made the exact same stuff. I just waited and said, wait and see. Every time it dropped a little bit, it rebounded. The management is still here. Valuation is still solid. The forecast is still solid. The buyback plan is still solid. Capital allocation, I like it. Why not wait a little bit? I waited. And it dropped from 400 to 300, consolidated a little bit, then crashed to 200. And now here we are, approximately at the same time where I bought. I could have sold this position, made a quick double, outperformed the S&P 500, but I waited because my strategy is to buy and hold and trust these companies. And what you see in the short term is that anything can happen in the stock market. That's a good lesson for this video. Don't try to be smart. Everybody will do mistakes. That's similar to when do you buy a stock that is going down. You can never time the market, buy at the perfect bottom. That's impossible. So I just waited, and here we are. I didn't sell any position, any shares. I didn't buy more. I'm here with my remaining shares of AMR, and I have a 0% gain. It's a missed opportunity. Similar to Stellantis, similar to Williams-Sonoma. I could have sold the position. Maybe this situation of AMR is very similar to Stellantis because automakers, so both are cyclical industries compared to Williams-Sonoma, which I knew way better. But still, this is a big mistake for 2024. And if I was smart enough, if I had another opportunity, another stock, I would have sold AMR here, or even after the drop at 300. That's fine. I take the gain anyway. And I would have invested in something else. So that can totally happen. These kind of mistakes will happen again. I hope not, but you never know. Now, I made a video a couple of weeks ago saying I don't want to invest in these cyclical businesses anymore. I just want to have a portfolio filled with great companies that will be and stay great and will improve over time. That's my key lesson for 2024. I got burned with AMR. I got burned with Stellantis, and I got burned with other mistakes I will tell you next. I don't want to invest in these cyclical businesses. I don't want to invest in struggling businesses that have no expertise on. I mean, the expertise was here. I knew the company really well. It was just the industry, cyclicality. You have to monitor these stocks because these companies are struggling sometimes. They depend on a commodity price. So, okay, you have no demand for China, so the price of met coal drops, so the revenue for Alpha Metallurgical coal drops, and it's all about guidance, forecast. If they reduce their forecast, the stock price drops, and if China is not rebounding, it will continue to do so. So I'm still holding because now Guy's Peer bought some coal names. Monish Pabrai is buying more coal names. David Einhorn still has coal names. The thesis is still here. Wait and see. Maybe I will be wrong. Maybe I will update you for 2025, but I will not do the same mistake again. If it goes up significantly like this, I will sell. Okay, next one. When I said that I wanted to avoid cyclical businesses, I have another example for you, because I do the same mistakes over and over again. Let's talk about Oxy, okay? Occidental Petroleum. Here is the stock. You know Occidental Petroleum because it's one of the latest buys from Warren Buffett. He bought the stock a few years ago because he helped doing the Anadarko deal in 2019, and he bought more during 2021 at these prices. And when it was public that Warren Buffett had bought Oxy, the stock shot up, and I bought the stock just afterwards at a price of 50-ish, 55, and I bought more, and every time it dropped at $60, Warren Buffett bought more. So you have a psychological threshold here. So I bought more here. It was a decent position, and I bought because the story was very simple. 1, Warren Buffett is buying. 2, the management is insanely good. 3, the capital allocation is very, very good. They plan to do no acquisitions, no exploration for gas or new oil. They plan to do dividends and buybacks. Dividends and buybacks and major operations, and have a lot of free cash flow. A couple of quarters go by. They stop the buybacks. Their main focus is not dividends now. They do a huge acquisition with a lot of debt. So all the capital allocation program completely failed. And oh no, where am I? Let me go here. Let me show you what I mean. I bought for the clear capital allocation, and everything collapsed. And since the change, they didn't improve much. They have new debt that they have to repay, and they almost repaid it now. And because of oil prices volatility, the stock went down and down and down again. And I see people on Twitter crying because Warren Buffett is not buying anymore. He bought around $60, and now that the stock has dropped at $50, now in the 40s, Warren Buffett is not buying anymore. So maybe Warren Buffett has changed his mind. Maybe Warren Buffett is doing something else with his life, but he's not here as a psychological threshold, so it completely collapses. But Warren Buffett is not the only one buying Oxy. You have Prem Watsa. I can show you. Let me go to Data Aroma. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Warren Buffett is not the only one buying Oxy. You have Prem Watsa, one of the best Canadian investors. That's 30% of his US portfolio. Francis Chu, or another Canadian investor, buying Occidental Petroleum very recently. Warren Buffett, that's 5% of his portfolio. Li Lu, that's a recent buy from Li Lu, the best Chinese investor. That's 3% of his portfolio. And Dodge & Cox, which I'm not very familiar with. And Monish Pabrai bought it for 4% of his portfolio for Vagans funds. So you have a lot of big names buying Oxy. Still, the story has changed. The stock collapses. Another advice for you for this video: don't rely too much on other people's opinion, even if these are super investors. This is not something that I do often. Most of the time I take inspiration from super investors, and then I do my own due diligence, and if I like it, I buy. I don't blindly follow them. It's just that for AMR, the coal company, I copied it from Monish Pabrai, but I did my own due diligence. And for Warren Buffett, I followed Occidental Petroleum, and it was a fail. By the way, for Warren Buffett, I also followed him with Louisiana Pacific Corp and made a lot of money on this one. But this is a video about my mistakes, not about all the things I cloned from super investors. Like I bought here, and it went very nicely with some dividends. That's perfect. But okay, let me continue with the Oxy. PE ratio around 10. Yeah, it's a cheap valuation. It's about oil and gas, so no worries. And they generated some big net income in 2022, decent in 2023. They repaid their debt off, so that's fine. And they generated some good free cash flow and did some good buybacks. Okay, perfect. And if you look on the quarterly basis, more debt here, free cash flow decreased substantially, efficiency decreased substantially, and instead of doing buybacks, you see here in green that's the buybacks, and in red that's the dilutions. So instead of doing the buybacks, they stopped the buybacks and did some dilutions to pay the acquisition with more debt. So all the capital allocation program failed, and I was not convinced at all about this picture. So I sold a little bit of my Occidental Petroleum, and it's maybe 3% of my portfolio right now, so it's not a big deal. I'm just keeping a small tiny position in case it rebounds, but maybe I will sell out completely of the stock. It's a mistake. It was a mistake to just hold these shares. I should have sold some of them when the acquisition was announced. I don't doubt the quality of the acquisition. They may produce more free cash flow because of the acquisition, more lands, that's perfect. But this is not the reason why I bought the stock. So another mistake is I kept my Occidental Petroleum shares. I could have bought Google and made a lot of money. This is a huge opportunity cost. Now you are seeing this and say, oh, come on, you are crying about a 20% loss. That's not a big deal. It's all about opportunity cost. If instead of holding Occidental Petroleum for years and years and years, I just held the S&P 500 or Apple, I would have made a lot more money. So yeah, that's a mistake. Another stock that I kept is Alibaba. I've been a shareholder of Alibaba for a while. I know it's very famous. Alibaba is very famous in the value investing community on Twitter, on YouTube, because it's extremely cheap. They have a lot of cash flows. They have a lot of cash. The PE ratio is very cheap. The price to free cash flow is very cheap, and they do some massive buybacks. I hear you. I first bought my shares of Alibaba in 2018. So I know the story about Alibaba. I bought my shares at $208 at the peak in 2018. So I know the story very well. And I accumulated some shares over the years, went up, went down, and seems like the whole country of China is not rebounding. The stock market is not rebounding, the earnings are not rebounding, the growth is not rebounding, the retail consumption is not rebounding. So yeah, this country is struggling, all the industry is struggling, even Alibaba is struggling. So yes, they have a lot of cash. They said they wanted to restructure all their segments, like the logistics segment, the arm, etc., and to create shareholder value. It didn't work out at all. It didn't create any shareholder value. They failed to do separate IPOs. And now they announced recently that they want to bundle things out, to regroup things, segments, to create value for shareholders. As I told you a bit before in this video, I am tired of investing in struggling companies. And my plan for 2025 is to absolutely avoid struggling companies. And we will see if that works out. But this is typically a value play that could be a value trap. But what I see here is dead money. Don't remember, guys, that I bought here in 2018 and over, 6 years, zero results, minus 50%. I took a loss of 6 years. If I had bought the S&P 500, I would have made a lot more money. That's a stupid mistake, and I held this position. And if it goes up a little bit, if you have another, hope, faith, momentum for China with some stimulus, I will sell out of my shares. I don't believe. I'm tired. I'm not comfortable owning them anymore because the company announced new plans to create some shareholders' values, and we've been hearing the same stuff about Alibaba again and again and again. The company will rebound, efficiency, buybacks. The perfect recipe formula is here. Still, the management is struggling. Still, you have some bigger issues. But maybe I will do a separate video on Alibaba. This is This is very, very, very interesting story, but yeah, that's another mistake. Another one is that, while I was investing in my companies, there was a stock called Landbridge that became public. It's an IPO. What is Landbridge? I made some videos about it on my YouTube channel. In case you are new to this YouTube channel, I can tell you that Landbridge is a company similar to TPL, Texas Pacific Land, that I've been a proud shareholder of this one, sold it recently. They own lands in Texas. That's it. That's the end of the business model. So they get royalties when their lands are used, either for oil or for water or for data centers. So yeah. Oh, and at the time, maybe last year, TPL was the only company with these high margins, good capital allocation. I mean, that's fine, a completely perfect business model. And in July 2024, when I was too busy with a dry summer, etc., something IPO'd. Landbridge became public. Another company with a similar profile to TPL. For your information, I think TPL is the best business model I have ever seen. And now you have a little brother called Landbridge that is becoming public. I completely missed on this IPO. I discovered Landbridge when we were in October. What was I doing? What was I doing? And you have a similar story, same margins, same growth. That's perfect. Same. They have a lot. Some lands like now they have 300 acres of land, 300,000 acres of land in Texas. They have plans of data centers, but at the time they reported a S1 document. So when you do an IPO, you have to report a document with the revenue, margins, capex, etc. The business segment was exactly like TPL, similar profile and similar shareholders. Horizon Kinetics, for the story, is a shareholder of TPL, and Horizon Kinetics have been a shareholder for 20 years, 30 years of TPL. You have some activism. 50% of their portfolio, of their fund, is TPL. The CEO of Horizon Kinetics, Murray Stahl, is a big fan of TPL. And you know what? Horizon Kinetics participated in the IPO of Landbridge. They were present, and they own Horizon Kinetics owns 30% of the public shares of Landbridge. So the most expert fund on TPL is becoming really interested and owns 1/3 of this new business that is very similar. It's a second TPL. I made a video a few weeks ago, like this is the next TPL. Maybe. And I completely missed on this opportunity because I didn't follow them. The only way I would have known the IPO was if I followed them on Twitter, Horizon Kinetics, and followed their letters. But unfortunately, I did something else during this summer. I did something else. I don't know what I was doing, but I failed. From now on, I activated the notifications every time Horizon Kinetics posts, every time there is a letter, every time there is an interview from the CEO. I will be updated, and now I follow everything they do because I don't want to miss out of these golden opportunities. And since the IPO of Landbridge at the price of $19 per share, it went only up all year long, and now it's at a price of $60 per share. So it's a triple in 1 year. And I know that if I had this information in July, I would have put maybe 3, 4, 5% of my portfolio. I mean, 5% of your portfolio that triples makes a large difference. And that's how you outperform the index. You have information before everybody else. I should have listened to Horizon Kinetics, and I don't know. I'm too dumb to know what happened. I didn't know the business at all, and it was during October. In October, during a Prague Value conference with other investors, including, we talked about Dataroma, including Christophe Bloomstram. I was there, and somebody here talked about Landbridge. So I don't know what I was doing, guys. But now I own Landbridge. Just FOMOing into Landbridge. I want to be part of the journey. And as the price drops, I plan to buy more. So yeah, that's a missed opportunity, and it didn't cost me a lot of money, but it's an opportunity cost, missed gains, huge opportunity cost, because TPL, I know it very, very well. So Landbridge is very easy for me to analyze. I know the potential, I know how it works, I know the management, and now I know the insiders, and I know Horizon Kinetics, the gods of TPL, are owners of Landbridge. So you had all the green flags, and where was I? I don't know. Next mistake of missed opportunity. That's Games Workshop. Games Workshop, in case you don't know it, that's a UK-based company that sells figurines, war soldiers from the license Warhammer 40,000. I'm a fan of gaming. I'm a big gamer. I know the Warhammer license industry. I've played World of Warcraft for basically my whole life, so I know how it works. I know the figurines, I know the fantasy game. People are hardcore fans and can pay up hundreds of dollars to have these small figurines and play. This is a plateau game, great game, video games license. They do series based on the universe. I know it very well. And I've been following the stock since 2020, 2021. I didn't buy it in 2022 because I wanted to buy something else. That's fine. For example, I bought Google and Meta that went up even more. So far, this is not a mistake. But here, during 2024, the stock went nowhere and nowhere and nowhere. And the PE ratio was about 20-ish. Still, the earnings were continuing to grow, the revenue to grow, and something happened here because of they upgraded their guidance during this summer. They said, you guys at Wall Street have your guidance for revenue earnings. We will crush these estimates. So the price went up. Okay, very well. And now here they did it again. In November, they did it again. They crushed their numbers again and upgraded their guidance. I saw this big jump here. Oh, that was here. They upgraded their guidance. And I wanted to buy over here. But I waited and I waited and I waited. And my guess was, over the next few years, with Trump presidency, we will have an inflow of money to the US, regardless of the valuations, because of tech, because of AI. So if I have the choice to invest worldwide, I will mainly focus on the US. You have better companies, better management teams. So let me avoid the UK for a while. Maybe if Games Workshop drops a little bit, I will buy a small position. But for the moment, I'm waiting for this momentum to drop off a little bit, like it did all 2023 long. And unlucky me, they announced spectacular earnings, upgraded their guidance, and the stock went up 17% in one day. 17% in one day. Such a missed opportunity. And I was thinking, Trump was elected here at the beginning of November. So my thinking process was around here. I had 1 week to think, okay, US allocation, inflows, outflows, tech. Okay, if I have the choice, let me choose the US. And you know what? The stock doesn't care. This is just a spectacular business that went up 17% in one day. So I want to buy this stock, but I'm a greedy guy. I want it to drop back to where it was before the big jump. So missed opportunity. If I had bought this one, even a small position, a 5% position, if I had bought here, I would have outperformed the S&P 500 by a large margin. And all the mistakes that I'm doing, that I'm accumulating during this video, they add up. Small mistakes, huge mistakes, Landbridge mistake. The Landbridge IPO is maybe my worst mistake all year long. So that's it. And now we go to the next one. Speaking of missed opportunities, you know my investment style. I want to invest in, let's say, perfect businesses. Revenue growing nicely, earnings growing nicely, free cash flow growing nicely, evolution, AB, grow, focus, some buybacks, high margins, quality business, and evolution ticks everything. Evolution AB is a stock that I mentioned a lot in this YouTube channel. They do games for online casinos, and this is a Swedish company, market cap of $20 billion. And if you look at the charts for this business, this is just phenomenal. Why is Guru Focus not working? Come on. Can I see the financials? You will see the charts for revenue, earnings, cash flow, and I'm sure you will love it. Maybe you are already familiar with Evolution, but similar to my favorite investments like TPL, Fortinet, all these things, revenue up and to the right, net income up and to the right, no debt, a lot of cash, free cash flow up and to the right, efficiency 30% ROIC. They do some acquisitions. They are in a growing industry with a large tailwind. The world is going more digital, so the gambling will become more digital. They are the clear leader. They have 60% margins, free cash flow margins. Great. They do some dividends. They do some buybacks. Life is good. And look at the stock price. It has gone nowhere for 3 years, 4 years. It went up a lot during the high momentum during COVID with a PE ratio of 70, and then it dropped. PE ratio dropped, and now we are here. PE ratio of 14, 13, very cheap with the quality of the business. They have accumulated some issues, but nothing that can really kill the business model. And I bought some shares here, and then I bought some shares along the way. For the moment, that's an opportunity cost. For the moment, that's a mistake because I'm in the red. But maybe for 2025, it will be my biggest performer. Nobody knows, actually. Nobody knows, and I'm really excited to see the development, how they will do. Management is very confident. The guidance is here. They have some issues, yes, but the business is not touched. So that's a major mistake to just wait for the moment. Wait and see. So let me wrap it up for this video. That was all the mistakes I did for 2024, and 2024 is not finished, so maybe I will do more, but no, I think you have 10 trading days. I don't think I will change something in my portfolio. You have a compilation of all the mistakes I made, and if I avoided these stupid mistakes of just waiting, holding, focusing on cyclical industries, I would have outperformed the market by a huge margin. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.